All you're trying to do is comply with the rules that are out there as best you can. Now that you know there's a problem, you're taking the high road and doing everything you need to do to be in compliance with what the federal government tells you you have to do.
Very good. That's clarification on that.
And the reason is because you're self-insured. When you weren't self-insured, you can claim those premiums when the risk was transferred to the insurance company. Since you're self-insured, the risk stays with the county, so actual cost is what you need. Now there's a new law came out, you know, so it's the affordable health insurance, affordability, whatever it is.
That's yesterday's
Yeah.
Obamacare. Now there's a tax you're gonna have to pay, not fee, not tax.
An excise tax.
An excise tax that you have to pay by July 31st, so,
I invited you two guys to that.
Yep.
yeah, okay, you know about it then, okay,
Yeah,
good,
yeah.
good, good.
No, we had that meeting yesterday.
Okay, good, good, I just wanna make sure you're aware of that, it's a tax, you know, fee that you
Yeah,
have to pay.
that's built into the Empire's admin fees for next year, so
Okay.
we capture that.
Good.
I have two questions. After listening about the social service, is there any possibility the county is going to owe money?
There's a possibility, when everything's done, yeah.
Question,
But I think what's gonna happen is, we don't know. We don't know what the actual costs are. There's a possibility.
second question, what does the county have to do tomorrow at Vital to get this moved?
Okay.
What's first? Like tomorrow we gotta move. What is it?
Yeah, start with the earliest years.
Whatever you have to do to start.
Right. Well, I mean, right now, the accounting is gonna be, all the records that are in social services, or, I'm sorry, personnel department, needs to be moved over there, or they can come here and get what they need, so they can start identifying the claims.
Excuse me.
And that was the reason for the resolution earlier, for them to be able to do that legal, you know, in accordance with HIPAA. Okay, so, and now the records they'll come either here to do it and start getting the information they need to identify the claims put to a particular, either a particular government like the city, or to the department like the social services, or to the sewer fund, because all these things have ramifications. You know, what are the costs of the sewer fund? You're using your rates, and the cost of the sewer funds would be different now.
Higher or lower. And it might impact what you want to charge for sewage rates
So
to cover your costs.
information needs to get to your accountant, which is Benetech, and they need to assemble all the information, and it's a lot of claims. What the claims they have to, you know, for 5 years, go back, or even 6 years, and then come up with this is the claim for this government. These are the total costs for this government, and there's so much cash that's in this trust or internal service fund that will have to be reviewed and moved around. You know, right now you just can't do it without having the final cost for every participating government department in there.
And it as another facet of that, since I'm looking at your city of Amsterdam on your sign, it may very well be that the city of Amsterdam has been overcharged and is due money back, or it may very well be that the city of Amsterdam has been undercharged and owes money to the trust. Or the residual cash that's sitting there may be divvied up differently than a straight number of heads divided ratio. And that's important.
There's one positive, you know, and there's a positive in this. The cost to all the participating governments when you went this way is decreased. You've been charging higher rates than what your actual expenditure are, so you have been able to accumulate money in that trust. So it's been a really positive way of going to it. Now it has to be figured out where all the participants stand in relation to those dollars.
Could you repeat that? Could you repeat that, what you just said?
The positive?
Yeah, the positive.
Well, the positive is that the going to the self-insurance fund saved all the participating government's, revenue, I mean, expenses. You drop the cost of your insurance program. When you were fully insured, it was more expensive. Now you're self-insured, it's not. So that cost is there in the cash accounts of the trust.
Let me get back to 34 and 45, since I've been around long enough to have a good discussion on 34. I think that the concern at the time was, does it skew your, when you add those assets back in, obviously all the bridges and all the roads, does it
And
skew?
the buildings and the land.
And the buildings and the
trucks.
lands and all the rest, and minus the depreciation, does it make you look wealthier? Or is there some offset to it so that, let's say now our fund balance that might be $7 million won't look like $107 million?
No, because there's two sets of books. Your fund balances are still the same, okay? How you budget, how you look at your next year's budget are gonna stay within the funds, and those will be reported just like they are now.
Okay.
What happens is all these funds get, put together into a separate column called governmental activities, and then to that you add your assets and all your liabilities that aren't in these funds, because none of these funds have liabilities that are recorded, only current stuff like payroll and contracts that you have to pay within the next couple of weeks. That's all the liabilities in there, but your long-term debt's not in there, and this new thing that we just talked about today, the retiree post-health benefits aren't in there. So there'll be a separate, it's like the only finance statement I ever saw, there's two sets of books. One is the fund books, which we do now, and then one is the full accrual government-wide books. So they'll have two sets, and there'll be a reconciliation between the two.
The difference between those assets and those liabilities then becomes what?
It's either a positive or negative.
And if it's a positive,
It becomes additional equity.
It's additional net assets, additional net position.
for the county.
Right.
Yes.
All right. So then I have to ask you, if we were to implement that, do we have the assets within the county, whether in experience or bodies in the treasurer's office, as it's currently employed, to take on the additional? I guess we get to that point where we talk, about what's the cost benefit analysis to this thing.
Right.
What's going to be our additional costs, and what are the benefits that are going to accrue to the county, other than you have a better picture?
Right.
All right? Where does that show up? In a quarter of a point on borrowing?
Yeah, it might be a couple, 25 basis points going over a couple of years, then it's could be.
Could be 50 basis points. We don't know.
Okay, can you, obviously, can you take 34 without 45? Or you gotta take them
Well,
both?
okay, well, 34 is, or 45 is relatively new, 5 years.
All right, so
Okay, 34 is like 10 years.
yeah, so, yeah,
Okay.
that's about right.
Okay.
So the 45 is where we look at the out years on health insurance and
Retirees.
other employee, or non-employee benefits, or
Non-pension benefits.
non-pension benefits.
So, well, and that's gonna give you, I think you should, I recommend that even if you don't put that in, you should know what that liability is and just get an actuary anyway to do it. It's a good management tool. Basically, when you go into the, where can you, where does that cost come from? How does healthcare costs get created? How do retirement costs? And it's all created based when you're doing your agreements with your employees. So now you can show that, now you have, okay, we want to keep the same benefits. This is what's going to cost us in the future. This is what it's going to cost us every year, going forward, if we keep the same benefits, same packages there. Or if we increase them, this is what it's gonna be. You don't know that now.
Is it similar in the respect of like the workers' compensation fund where we account for those liabilities in the future years?
Yes. That'd be the same, almost the same. There's actually,
Very similar.
they're very similar.
Conceptually.
Like, for instance, when, in a workers' comp fund, someone, a firefighter, for instance, okay, an unfortunate accident, then he's disabled for the rest of his life, and you're gonna be paying $500 a week forever, you know, until whatever. Could be 50 years, you know, you don't know. The actuary tells you this is what we expect, and you get the present value of that liability, you record that now. And so, a participating government that's in there, if they wanted to cease being in your workers' comp fund, like you talked about adding the police for, from the city today. So, you know, that's when police, you know, it's a little dangerous job, and it could happen there. When someone gets hurt like that and they have a long-term liability, that's recorded now from your actuaries in the long-term debt group, or it's in the MS fund that you have. Or M fund, what is it, MS? Okay.
All right, that brings me then, if the MS fund has a negative fund balance,
Right. It means that,
it means that there's a future, I think in your notes, there's a future, there's a cost to, there's a future cost increase
right,
down the road. Or can it be managed by annual operations? In other words, does it have to be balanced? Does it have to be zero?
Well-
Should all of the components, governments, kick in whatever that number is for that loss for that year?
well, at least they should recognize the fact that they have a payable to this fund. And you don't have to pay it right away, I mean, you can still.
But they should know it.
Yeah, they should know. That if someone wanted to withdraw, this is your withdrawal liability right now, and it includes, you know, everybody that's gonna get future claims out of the workers' comp. And you need to fund this now, and can go forward with your new plan.
All right, so you're looking at, let's say, engineering costs for the roads and bridges, actuarial costs for future on health insurance costs and the rest. And then there's the additional cost, expense for the Tasky company.
Well, no,
You're
we'll
doing that
be
for
auditing
you
the same
do that for the
numbers.
same price?
We'll be auditing the same numbers, the financial statements are like now, become like 40 more pages, but yeah.
Okay. All right.
Yeah.
Anyone else have any questions on 34, 45, 52?
It's up to 70 now.
Yeah.
Oh, okay.
Yeah, okay. Larry?
I have a question on the whole overall thing. At the end of this process, are we going to have a complete, clear, accurate picture of the county's condition financially and otherwise for, because we have a new county legislator, which you mentioned taking office in January 1st, and I think they should have that information, so they're starting square one, so they know what position the county's in, where financial. So we're going to get you feel a very clear, accurate picture of the county's
Yes.
condition.
Right. It'll be better than you have now. Right.
I think what he's just been discussing here between the actuarial things and stuff, I think that's important in that case. I think it gives a clearer picture of the county's condition. I mean, I know businesses do that. I mean, all your equipment, you depreciate it, that gives you actual clear value, what everything is, so I think that's a good idea, but
It won't happen in 2012 financial statements, but it may happen for 2013.
okay, thank you. Well said.
Okay. Rich?
I just got a clarification on one thing. Talking about the MS fund. We do have a figure, a reserve
for the IDNR for the workers' comp fund. And when an entity wants to get out of it, we do have how much money is owed to the user by the entity to get out of it. Right? So that is being done.
Okay.
There are very few counties that have money in that fund to cover the reserves.
Right.
For the IDNR and future liabilities. So I think it's only 2 or 3. And we're one of them.
Okay.
And also, the reserve, there's money over the reserve, I don't know the fund balance, but it's a few $100,000 over the reserve that's sitting there that keeps our rates kind of low, that we use off and on.
Okay.
And one item that Dominic mentioned, and you mentioned also, 34, GASB's been around like 10, 12 years. And 45 just come in, like I said, a few years ago. I always thought, going to these seminars, that we had time in 45 for future retirees to set that up. I don't think there was a time frame that would immediately.
No, it's a 30-year amortization period.
Right, there was a time frame to do it.
Yes.
Right.
And also going back to 34, it's been 10, 12 years. We had 2 other auditing firms here that worked with the financial officer in the county to put this information in his financial statements, which was never done. So I'm glad you guys are doing it, but in the past, things were done also by other accounting firms. Just people understand that.
Sure, sure. Well, just a recommendation we're making. I mean, we can issue an opinion, and we're still going to always say, if you keep the same accounting way you do it, that you're not in accordance with GAAP or generally accepted accounting principles. You're not until you do all these things we just talked about. But, I mean, you can still continue to conduct business that way, you know, but you're going to have...
But there's an example of what could happen too. For instance, we have a small town that we do an audit for, and they do their financial statement, external reporting the same way you do. They had USDA budget. They had a USDA loan, and the USDA said, you have to do this. If you don't, we're not going to give you any more money. Now, I can't tell you, I guess I put on my Johnny Carson Carney hat, maybe a little clarity, but I can't tell you what may come down the future for you in terms of maybe borrowing money from a source like that for whatever situation that might arise. But more and more of the loan covenants that are inherent in the loan agreements for the new debt that's being issued are going to require this.
USDA out of up here in Hudson area, Adirondacks, they all went to a seminar and they came back and said, well, everybody's got to put in GASB 34. So, you know, now that's an edict, and well, okay, well now you all got to put infrastructure in. You don't have that before. Well, and so now they got to do that. So, or they won't give them the loan.
And also, you brought in Vonosky, so we've been working with Vonosky for the last 2 years.
Right.
For retirees, look at retirees, every employee in the county, plus the retirees. We start this future retiree accounting with Sean to do that. So that is being worked on. You're right, I think we need an actuary to get the real future, real information in there with Vonosky doing that.
Right. And there's many actuaries that do this right now. So I mean, the GASB 45 was the full actuary act, basically. You know, when that came out, actuaries jumped on it, and you know, that's what happened.
So next Tuesday, when the board passes the resolution, I have all the files ready from 2007 to 12. I want to ship it down to Benetech myself in person.
Okay.
With one of the PPW trucks, I'll bring like 30 boxes down. I think I would drive the truck.
Just make sure you get the timesheets in the right department, so when they allocate those costs, they go where they're supposed to go.
Okay, so the one, when we started off on what is the responsibility of the finance committee in overseeing the audit. Give us an example of what you mean by overseeing, because truthfully, I don't think any of us know.
Well, classic example. One classic example. One of the things that we're required to do, in large part because of Enron and Adelphia and Tyco and WorldCom and all those other people that misbehaved in the for-profit audit world, is we're required to ask you if you're aware of any fraud and give you the opportunity to tell us. And we are specifically charged with asking, and in our profession, we refer to you collectively as those charged with governance. So as part of your oversight, you in effect have an opportunity to give us input as to where we maybe should be looking for anything of which you may be aware, or about which you may have concerns where you think fraud may have occurred. And kind of clue us in so we know where to go and what to look for.
Does that come in like during the letter of engagement?
That's what this meeting's about, a little bit, yeah.
That comes in early on in the audit process so that we can know.
So the letter of engagement is basically between the external auditors and the finance committee or
The Board of
The Board of
or the
Supervisors.
board of supervisors?
Right.
Okay. So there's where most of the questions are spelled out.
Right.
Most of the input for the board is in that
Right,
Yes,
2 or 3 or 4-page letter.
right. It just spells out, this is your responsibility, this is management's responsibility, this is our responsibility. You are responsible for maintaining the county records and good, so we can audit them and all those type of things, and that's what management's responsible for. And you're responsible to oversee that management is doing that. And you'll do that, you get your budget reports, you get, and all that, I mean, that's all part of your finance committee's duties.
and at the end of the day, it's our responsibility to get to the point where we can say to you, there's nothing different enough from the way it's presented in these financial statements that would cause anybody to change their mind about your accounting.
Okay. All right, well, that'd be something new. We've never gotten involved in letter of engagement, so. All right. Tom?
You had said earlier that our rules of procedure say that the finance committee, is that what you said?
Yeah.
That the finance committee is
Committee of jurisdiction, I think.
committee of jurisdiction for the oversight, but it sounded like you were saying the board of supervisors. Is it as a whole or is it the finance committee?
We report to the board of supervisors.
As a whole.
As a whole.
So I guess what I'm trying to say, do we need to change the rules of procedure so it says as a whole, not finance? I'm a little bit confused.
Well, the finance committee is a subset of the board of supervisors, and that could be charged as part of your duty to hire the audit firm,
Yeah, because
Or make
in our rules of procedure,
make a recommendation to the board.
the finance committee says within the jurisdiction of the committee, and it talks about the departments that are involved. But then after it describes the departments, it says as well as borrowing and indebtedness, external audit, taxation, supervisor's expenses, resolutions, local laws involving the appropriation. So the external audit has been a function of the finance committee or oversight, but we've never participated.
So it is the finance committee.
Well, by our rules of procedure, the
Right.
board gave to the finance committee the responsibility for it. All right? Now, does it say that we sign the agreements? It doesn't say that. The question gets to be is, how we get a letter of engagement? How do we go through that process, discuss it? You know what I mean? If there are any awarenesses that we need to bring up, how does that go forward? And so, there are issues.
Looking at the charter, can this change January 1st? Can the 9 people decide?
Well, the legislature come January 1st, still got the same responsibilities as the Board of Supervisors have now.
Right.
Except there'll be 9 rather than 15
That's right.
who have the responsibility. So basically, it's, in our charter, the legislature is the, like every legislative body, they're the ones that oversee the finances of every municipality, whether it's town board, city council, or
That's true.
you still got the responsibility. Nothing changed.
Are they required to have committees?
Well, I don't know. That's a discussion.
I've seen 'em.
That's a discussion for Larry's committee, not for this one. Any other questions of these two young gentlemen?
Thank you.
Excellent.
All right.
Thank you.
Thank you.
Thank you
for
very
We-
much.
We like to
Time
serve
to
you,
talk.
and we were out there today working, so, you know, we know what the property taxes are real good today, so we know that, so. You're counting for them right, so.
All right.
Okay, thank you.
Okay, thank you, guys.
Thanks for having us.
If you don't want to go out that side, you can go out that door.
I left that stuff over here. so.
Thank you
Unless
for
you
your
left stuff
time.
out there.
I like the love the same way you came in. As long as it's gonna be first.
Okay, the first resolution is a resolution adopting introductory local law number 2 of 2013. The local law authorizing the private sale of county-owned property not needed for county purpose. Town of Mendon needs a sponsor. Tom needs a second. Michael. Is there any discussion on this? Do we know? Everybody familiar with it? Okay, no question. What's the pleasure of the committee? Move it? Move it, everyone?
Yeah.
Next resolution, resolution adopting introductory local law number 3 of 2013. Same thing, Town of Mendon, Supervisor Quackenbush. Is there a second? Brian? Any questions about this? John?
Just didn't occur to me quick enough, neither of these are on Abbott or Reed, are they? Are these part of the flood damage properties?
No, it's Main Street and
That's all right, as long as there's
64, 267, where is it? I can't remember. It's 264 Main, I think, or two, it's Upper Main Street's one, and it's on State Street, I'm sorry, Hancock Street. Green, you don't know, it's near the car wash. Green.
Okay. The next resolution, resolution adopted introductory local law number 4, same stuff, Town of Amsterdam. I think Supervisor Demeza sponsored this one. Is there a second? Supervisor Quackenbush? Any discussion? If not, it's a pleasure, move it. Okay, next resolution, resolution authorizing acceptance of aid for prosecution grant 2013, District Attorney. Yes,
Or
Barb?
she's going to sponsor.
Yeah, needs a sponsor.
I'd like to.
Okay, Barb, is there a second? Brian? Any questions on this? If not, it's a pleasure, move it. Next resolution, resolution authorizing John McDonald Engineering to solicit bids for Montgomery County Sanitary Sewer District Number 1 roof replacement project. Is there a, Brian? Is there a second? Tom or Herb? Herb, thank you, Ann was up first.
Yes.
All right, my understanding, do you really want to do this? My understanding is, this, it's not part of this resolution. My understanding from talking to them is that you want to take the money from your fund balance to pay the bill? Really? And what we borrow at? You really want to do that? All right. Okay, on this one, resolution, move it? Okay. Next resolution. Resolution amending 2013 operating budget, increase grant funds, public health. Needs a sponsor. Quacky. Needs a second. John? I guess there's no one here. I guess it's just more of the grant funding for 2012 ending June 13th is currently appropriated, whereas the fund has been approved to continue. That's what the grant's for. Any other questions? If not, what's the pleasure? Move it. these are add-ons, so this, there was a resolution last week that was discussed about, resolution for the old courthouse network infrastructure upgrade, data processing. Has a sponsor, has a second.
Move it.
This just puts everything into one and brings it from the, right, Dan? Right, anybody have any questions of Dan? Yes.
I don't have it in front of me. Were we good with the final number we put in there?
30,000.
That's what we were good with?
Yeah, I think that, that covered the computer equipment, the hardware, I mean, the data portion of it, and DPW on the phone. Right, everybody agree?
Yep.
Any questions? Anyone? If not, what's the pleasure? Move it. We have a resolution approving abstract of audit claims. Needs a sponsor. John needs a second. Michael? Any questions? If not, what's the pleasure of the committee? Move it. All right. Anything else coming in front of the committee? If not, is there a motion to adjourn? Michael? And Bill? All in favor? Aye.
Nate Krasowski.